Good morning, everybody. Hey, welcome to Thursday. It is Jobs Day, and we will get to that in just a second. Before we do, though, let's remember that there's a lot of things in this world that we cannot control. However, you do have the opportunity to take control of your retirement by knowing how much risk you have in your current portfolio. To do that, give us a call at 863-382-0037. Hey, with that, it'll be just me and Scotty today, and Scotty will be joining me here up next.
105.7 Highlands Light FM with the late Patrick Swayze. She's like the wind. Okay, it's 8:40. It's about that time. Phillip's on the line. Let's head to beautiful downtown Sebring to Statler Financial Services. Good morning, Phillip. How are you?
Good morning, Scotty. Hey, you and me together again. It seems like it wasn't that long ago for a change.
I know. The dream team returns. How about it? Yay.
Don't tell Dave that, though, you know.
Okay. All right. That'll be our little secret. Okay.
Hey, man, yesterday was, let's just say, a doggone good-looking day when it came to Wall Street, you know.
Okay.
We had some major gains. The S&P 500 was up a little over 2.1%. That was up $87, almost $88, back up over 4,000 to 4210. The Dow Jones was up 1.6%, $535, closed at 33,309. And the NASDAQ, let's just say it was the big winner, up 2.9% yesterday, $360, closed at $12,855. So a great day on Wall Street yesterday. Matter of fact, I saw a headline right before I flipped over to get on the show that said the NASDAQ is actually now in a quote bull market.
Really? Okay.
Yeah. So it's gone from bear to bull, and well, let's just face it, it's got a ways to go to get back to its all-time high of over 16,000. So no, we're still a ways away from that.
Okay.
We get started. So let's start with the Dave's part, which would be economic news, and where we are today in terms of jobs came out, and they were not quite as bad as expected. They're expected to be 264,000. It came at 262,000 first-time claims, basically, in line with what was expected. Haven't seen continuing claims yet. The other big news today, we had consumer price index yesterday. Today, we get the producer price index. That's wholesale prices. What is costing businesses and manufacturers to make stuff? How much has it gone up? And so the producer price index actually was expected to be up 0.2%. It was up last month 1.1%. It actually fell 0.5%.
Okay.
So that was some good news that their prices are coming down. And so that was good news. As a matter of fact, when that hit the wire and came across the ticker at about 8:30, we did see the futures start to climb again, kind of like yesterday when the numbers came out. They like what they're seeing, and so those numbers on the futures are starting to really increase this morning. If we look at the core producer price index, which takes out certain things, it was expected to come in at, well, I don't have an expectation for that one actually, but last month it was up 0.3%. This month, not quite as much. It was up 0.2%. So some good news there. And then I look at the total, right? Year to date, what those numbers look like, or year over year, what those numbers look like. And the core is now at 5.8% versus 6.4% last month. And the total PPI is sitting at 9.8% versus 11.3% last month. So that's some good news when we look at our economic numbers, and we continue to have hope, Scotty, that maybe, just maybe, the Fed can finally land something in a soft recessionary period. But we still got more data to come in. We still got more effect of higher interest rates on folks out there. And I think that's going to continue to put pressure on folks, but hopefully it is going to reduce our inflation. And that's really what the Fed's looking for.
Right. Okay. So that's that all sounds good to me, Philip. You have more
Does
good
it?
news for us?
Well,
Yeah.
we do have a couple things out there. Let's start off with Disney.
Uh,
Um, Disney had a, a a good quarter. They had better
okay.
than expected earnings. They announced a December 8th launch for their ad-supported version of Disney Plus streaming service. It's also going to raise prices. Get that.
Hmm.
So the ad-supported version of Disney Plus is going to cost you what the ad-free version costs you right now. And the
Okay.
ad-free version is going to go up by $3 from $7.99 to $10.99. So
I see.
a month.
Okay.
Yeah. It's all about, raising the dollar, right? So
Right.
because here's the deal. Disney's streaming service actually lost money. That part of their business lost money, and it lost a lot more than what analysts had expected. Now, granted, Disney did say that it's going to be 2024 before they expect to stop losing money on their Disney Plus. But and I guess I didn't realize this. I knew Disney owned Disney Plus and they owned ESPN and ESPN Plus. I didn't really realize, I don't believe that they owned Hulu. They don't own 100% of Hulu, but them and Comcast own Hulu together.
Right.
And so those are some pretty big names when it comes to streaming services. But just understand that if you're using Disney Plus, if you're using ESPN Plus, and if you're using Hulu, get ready for some price increases because they're coming. I read a whole article about going up anywhere from $2 to $5 a month on those streaming services. So that's going to be a big deal going forward. But Disney's doing well this morning. They're up almost 10% this morning.
Okay. All right.
Before
Good
we
news
get
for
going.
Mickey. Yeah. All right.
Yeah, I guess it is good news for
I guess
Mickey,
so.
isn't
Yeah.
it?
Yeah.
So we do have some other reports coming out in the entertainment business. I guess you'd say the amusement park business. Six Flags reported their quarterly profit and revenue both fell short of what Wall Street had expected. And a matter of fact, Six Flags said that they saw a 22% drop in attendance
Really?
this last
Okay.
quarter. Yeah, that's not good news for them. And they're trading down about 13.33% this morning before we get going. The other thing, we've noticed this, Dave and I've been noticing this, that, if you're a top end retailer, those people are still spending money, and it's no different for the company Canadian Goose. They're an outerwear maker. They're the higher echelon luxury retailer type person. They exceeded on revenue. They had a smaller than expected loss for the quarter. They're trading up 9% this morning.
Wow. Okay.
Yep. So we had a couple others. We had Warby Parker, which is a maker. They make eyeglasses, eye frames, and that kind of stuff. They had a smaller than expected quarterly loss. Sales exceeded estimates. They're a big winner this morning as well. They're up almost 4.5%. We got a couple things not quite so well. Cardinal Health, another healthcare provider. They had a mixed quarter for this quarter. They beat on earnings. However, their revenue came up short of expectations. That's putting a little pressure on them this morning, down 3.6%. This one's not an earnings, but I just couldn't resist this, Scotty. I just couldn't resist this headlines. Bumble tumbled 8.9% this morning. I couldn't resist. Bumble tumbled.
Good.
Right. They didn't report earnings, but they did come out and cut their annual revenue forecast for the quarter. They have a big competition between them and the parent of Tinder, which is the Match Group. And I guess the Match Group's come out with a new dating app, not here in the United States, but over in Western Europe, called Badoo. And so
what's it called, Philip? What'd you say it was called?
Badoo, Badoo. I don't know if I said that right, but yeah. And so And
I
so
love it.
they blame the Russia-Ukraine war has been hurting their sales of that over there in the Western Europe. I thought that was interesting.
That is
Trading
Yep.
trading down 6% this morning. You got to have a little entertainment through the whole process.
That's right. That's right.
The last one I have for you is Sonos. And people may not recognize that name, but they're the ones that make speakers. They're smart speakers. We have one here at our office that we stream our music for in our reception area. They had a break-even quarter, but that was a surprise because they were expected to actually make money, and they didn't. Right. And revenue came in below forecast as well. So that was 2 strikes against them. And then the third strike was they cut their full year forecast. And 3 strikes, you're out, right? So
right.
They're trading down today 16.5%.
Okay.
Yeah. Big down.
Sure.
So looks like the way we're going to start today doesn't look bad at all this morning, Scotty. We got a lot of green ink. Starting out, we got the Dow 30 up 0.7%, S&P 500 up a little over 0.6, and the NASDAQ 100 up a little over 0.6. So everything's looking good on that front. Commodity side, we've got gold and silver giving back a little. Silver's down about 1%. Gold's down 0.1%. And then crude oil's made a huge jump over yesterday's starting point, where it was about $90 a barrel. It's up to 93.42. That's up 1.6% from last night's close.
Okay. Wow. What's going on with oil, Phillip? I mean, it was just going up well into triple digits, and then it came down quite a bit. And I mean, what's the deal with oil? What can we expect going forward, you think?
It's hard to really say, because here's what's really influencing oil, or at least gas prices, right? It's the gas price that everybody pays attention to.
Sure.
They can care less what they pay for oil. It's what gas costs. And so, and gas, I saw a headline this morning also that said that the average cost of gas for the nation is now below $4.
Okay.
And it wasn't too long ago that it was over $5. So that's a good sign. So I think a couple things. One is that the expectations, people are being more fuel conscious. So we're being more careful about, the vehicles that we are purchasing when we have to purchase a vehicle. We're being more careful about how many trips we make, back out at night to the grocery store and that type of stuff. So I think the consumer has reduced the amount of fuel they're using because it just got too expensive. They couldn't afford it. I think so. So it's a supply and demand issue. As demand decreased, supply, even if it stayed the same, then the price is going to come down. And we had some meetings with OPEC, and I think they agreed to increase their production a little bit. So that could be helping a little bit as well. And then I think the forecast, futures are always looking ahead.
Right.
They're looking down the road, not today. And I think the expectation is that in the fall season, that because prices got so high, that people are going to slow down their travel. We had pent up demand for the summer. Everybody was going to go travel this summer, even if they had to go into debt crazy
to do it.
They're going to do it, right? Because they have not been able to travel for so long. Well, that's done now. And now we look at the fall. Okay, now that's out of my system. I'm not traveling. As a matter of fact, I'm gonna contract what I'm doing and be more conscious of everything I'm doing. So I think that's probably the big deal for oil right now.
All right. Good information. All right. What else you got for us there, Phillip?
Hey, that's really about it as we close up. But don't forget that, hey, we're here for you. We help develop what we call a core retirement design to help people design the retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement phone consultation. And then don't forget the Statler Financial Radio Show this weekend, where we help you plan for your retirement. Make sure that you're on the right track. 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
Good stuff. Thank you, Phillip. We'll do it all again tomorrow. You and me.
All right, buddy. You and me tomorrow again, huh?
You bet. Yep. Dave will be back on Monday, but good talking to you.
All right, man. See you tomorrow.
Take care. There's Phillip Statler, Statler Financial Services.
Hey, folks, again, I want to thank you for joining us today as we get close to the end of this week. We've had some really good days, and the hope is we can continue. Question is this just a bear market bounce? Nobody really knows. Stay tuned. See you tomorrow. Bye now.